Welcome back to Bazaar Morning Call. This morning, the Gift Nifty is suggesting a strong start. Now, with the markets almost at trading around lifetime highs and FIIs have now turned net long in this market, is this uptrend going to continue? The Nifty implied opening suggests so, but let's see, there's been a lot of volatility as well. Our research team is standing by with the list of top 10 stocks that you need to watch out for today. First up, Nigel will tell us about NMDC and how the numbers look. Nigel.
Well, that's right. NMDC's numbers on the top line actually was in line with what we were working with. We already had the volume numbers, so the other parameter was in line, given that the top line is in line. The disappointment has come in on the EBITDA, because most brokerages were either at around 2,500 crores or in excess of that, and the number that's been delivered is around 2,100 crores. So that's around a 16% miss in comparison to the poll number, which explains why the margins as well were lower. Two factors did hurt them. One was the royalty. On a per ton basis, on a sequential basis, it's gone up by close to around 20%. As a percentage of sales, it's at around 47%. That's much higher than the 42 to 45%. And other expenditure as well is higher. Maybe some part of the other expenditure could be one-off, given that it's the final, it's the final quarter of the year. So the numbers are disappointing. Expect the stock to open up in the red, but let's see what happens from there, because in April itself, they're taking another price increase. That's about NMDC, but let's go to Mangalam to tell us about United Spirits. Mangalam, morning.
Good morning. So yesterday, United Spirits had their conference call at 3:30, so that was post-markets. Important takeaways that we got from there. One, there has been pressure for the consumers at the lower end of the wallet, and as a result of which, there could be moderation expected for a couple of more quarters, and that's largely because of their popular volumes. For premium trends, they continue to be intact. In fact, the company continues to target double-digit volume growth in prestige and above on a full-year basis, and also they target double-digit revenue growth for the full year, most likely to be back-ended in the second half of this year itself, and that's something which is a positive. The other positive is that they see no impact of demand on account of elections, and while commodity inflation has seen some moderation, they will see some margin expansion. Remember, last year on a year-on-year basis, they've beat street expectations and their own guidance on margins by about 100 basis points. So maybe the expansion may not be as much as what they saw in the last 1 year. Brokerages are largely positive, but a little conservative given the valuations as well. So Macquarie has raised their EPS estimates by about 6 to 7%. ISEC continues to maintain their ad rating with a target price of 1,200. And JP Morgan says that they retain underperform at current valuations, largely because they believe medium-term upside is priced in. So on account of all of this, I expect mild green on United Spirits today.
Okay, all right, Mangalam, thanks a lot for that. Well, let's get back to the PSU miners. I'm looking at Nalco first up. Those numbers look good. On the top line, there was a bit of a miss out there, in all probability because of lower alumina sales. But the EBITDA number was beautiful. It beat estimates by close to around 15%. NMDC missed estimates by around 15-16%. Nalco has gone ahead and beat estimates by close to around 15%, coming at around 1,100 crores odd. Two factors played out. One is other expenditure is much lower, and they're getting the benefit of using captive coal, which explains why the cost of power and fuel has come down drastically by close to around 16%, despite producing a little bit more aluminium. So that's positive. The segmental breakup as well comes up for you on the screen. You have the chemicals business, which is effectively the aluminum business. That's the one that drove this beat. Came in at around 500 crores approximately, while the aluminium business was steady. And keep in mind, aluminium prices have moved up. So in quarter one, these numbers will look even better. So going with green on that one, there's a technical parameter as well that has come out of the F&O band. So green on Nalco. Next, moving to GMDC. Year-on-year, weak set of numbers is what they delivered. However, on a sequential basis, there is a recovery. So on a sequential basis, the revenues are up by close to around 30%. Even on the EBITDA front, just take a look at the recovery we have seen on a sequential basis. From 21%, it's gone to around 27%. So I think because of the sequential recovery we have seen in the operating profit, the street will like it. They've also gone ahead and given a dividend of around 9.55 rupees. The stock has corrected 20% from the recent peak. There's a sequential recovery and the dividend bodes well. So I'm expecting green on this particular counter.
Okay, well, let's go across to Ekta. She's joining in to talk about Natco Pharma and why you should be watching that one. Ekta, good morning.
Morning. There was the highest ever revenue and profit for FY24, which was delivered by Natco Pharma, and that is because of Revlimid generic and the contribution that they've seen from that particular drug. There was, for Q4, there was a one-time charge of around 90 crores in the domestic business, which one needs to account for. Numbers again were higher due to Revlimid generic contribution, but were below Nuvama estimates. So revenue came in at 1,068 crores versus estimates of 1,109 crores. EBITDA 497.3 crores versus estimates of over 500 crores. Margins 46.6% versus 37.8%. And profit 386 crores. Street was anticipating over 400 odd crores. So based on what they have reported versus estimates, it's below. But if you look at it on a year-on-year basis, it's a handsome set of numbers only because of the contribution of the US business and especially from Revlimid Generic.
Okay, and yesterday was a busy day with pharma, lots of pharma yesterday, and we'll come back, Ekta, with more with you as the day goes along. Thanks for that. That's Natco in focus. Now let's focus on LIC, the largest insurer in the country, and what are the numbers looking like? Vamakshi's got details here. Vamakshi, morning.
Well, good morning, Prashant. Well, absolutely a good set of numbers coming in from LIC. When we look at the total annualized premium equivalent, or APE, that is seeing a growth of almost 11% on a YOY basis, and the estimates were somewhere around 4% growth. So definitely this is a beat coming as far as total APE is concerned. Now, out of that, the group APE has managed to grow by almost 61%, but this is much lower as compared to what we were expecting. It is we were expecting somewhere a growth of somewhere around 109%. The individual APE, however, was down only 2% versus estimates of a fall of almost 23%. So this is better than what we were expecting. So overall, as a result, we're seeing a beat as far as total APE is concerned. The value of the new business, however, is seeing a downtick of almost 2% at 3,645 crores, and the value of new business margin is also down nearly 215 basis points at 17.21%. But overall, as far as APE is concerned, it's a beat, and as a result, I'm going with the green for LIC.
Okay, thanks a lot for that, Vamakshi. Well, let's hop across to Vivek and wind down this segment. He's joining us to tell us about Borosil Renewables, TVS supply chain as well. Morning, Vivek.
Well, good morning. As far as Borosil Renewables are concerned, along the lines of what the management has been guiding, it's been a double whammy in the negative sense as far as Borosil Renewables is concerned. Q4 has been an operationally weak quarter. Let's have a look at the numbers first. Revenue is down almost 8% on a year-on-year basis. An operational loss this time around of 25.5 crore versus an operational profit last time around. And on the bottom line, the company has gone ahead and reported a loss of 53 crore versus a profitability last time around. So what exactly has impacted the company's performance this time around? As far as the export subsidiaries are concerned, what's actually happened is that weak demand in Europe has gone ahead and impacted the performance over there. Now, coming to the Indian market, along the lines of what the company has been saying, due to the over-presence or dumping as far as Chinese players are concerned, the selling price in India has been impacted significantly, and that has gone ahead and impacted the EBITDA. Along with that, when you're talking about the prices of solar-grade silicon, it has dropped by almost 80% on a year-on-year basis, now at 10.3 cents per watt as far as May 15th, the recent rates were concerned. So as far as Borosil Renewables is concerned, the key to watch out for would be the imposition of ALMM. Now, coming to TVS supply chain, a reasonably good operational performance by the company. Revenue is higher by almost 4.5%. Now, when you're talking about the integrated supply chain segment, that continues to grow. EBITDA higher by 3.7% on a year-on-year basis. Margins largely flat, 7.1% versus 7.2%. Profitability of 5.38 crores this time around versus a loss of a little over 12 crore last time around. What is it that the company has guided for? The company says they expect to reach 4% PBT margins by FY27 versus just 0.3% now, and the ROCE target is at 16.5% by FY27 versus around 4.8 now.
Okay, what about Timken? You're also tracking that one, Vivek?
Well, in Timken, we are expecting a very large block deal today. We are going with the red with this particular name. This is simply due to the large discount that this particular deal is going to happen at. So we understand that the promoter entity, which is Timken Singapore, that currently holds a little over 57% stake in the company, is looking to go ahead and pair 6.6% stake. Now, this particular deal should happen at a floor price of 35.50 rupees a share and a discount of 10.2% to yesterday's closing price. The broker for this particular deal is BofA Securities, and there is a lockup of 180 days for further sale of shares. Now, it is important to note that post this particular deal, the shareholding of Timken Singapore will fall to 51.1%, which indicates that there could be some sort of very less room for maneuvering as far as further sale of shares is concerned, because there could be a loss of a simple majority. So that particular overhang, it will be important to see whether that goes away after today's deal. So maybe opening in the red, you could see some recovery happening in case this particular overhang goes ahead. Now, when you're talking about some context, in June 2023, Timken Singapore sold a little over 10% stake in the company. That time, the floor price was 3,000 rupees a share, which was a 14% discount to the previous day's share. So now there has been a significant reduction as far as Timken Singapore's holding in Timken India is concerned.
All right. Well, there's one more. Vivek, thanks very much for that. There's one more deal. Concord Biotech will see that. Abhishek is here with details on this one. Abhishek.
Well, Prashant, sources tell us that there will be a block in Concord Biotech. Citigroup is the sole book runner over there, and Ontario Incorporation is the seller. So the floor price is at 1,320. As Vivek alluded to, there are steep discounts happening in block deals. So there is a steep discount of 8.5% to yesterday's closing price in this deal as well. The offer size is about 468 crores when calculated at the floor price. So 3.4% of equity is on offer with respect to selling. So seller will have a residual stake of 2% post the transaction. 90 days lock-in is there for the seller. Back to you.
Okay, thanks a lot for that. Plenty of stocks to watch. Here's a quick recap. Stocks with positive news flow: LIC, United Spirits, Nalco, GMDC and TVS Supply Chain. While stocks with negative news flow: NMDC, Natco Pharma, Borosil, Renewables, Timken India and Concord Biotech. But let's also get a handle on what's happening in the world of commodities. Manisha Gupta is joining in. Manisha, hi, good morning.
Morning, Sonia. Thank you for that. Well, it really has to do with the geopolitical tensions across the globe that the commodity markets are looking at right now, from what's happened with Israel, with Russia saying that they will build a small nuclear power plant in Uzbekistan, with weather concerns and thunderstorms that we've seen in U.S. also leading to some damage. There is safe haven buying that has returned in many of these tangible commodities. So whether it's gold, which gained up by nearly 1.5% overnight, now trading about $23.50 an ounce, or silver prices, which reacted with 4.5% of a surge, back above $31 an ounce right now. It was also the case with the base metal prices. So whether it was copper, which gained 1.5%, aluminum or zinc, which also are trading quite positive. So all of the metals are trading in the positive in Asia yet again. The markets will also watch out for the US PCE data and the China PMI numbers. Well, that will be in focus now for the further direction into the street. We also have seen a bit of a decline in US dollar index, which has been supportive, and is the reason that you have crude oil as well back above 83 right now. So all commodities off its lows, and we've seen some opportunity buying come back.
All right, Manisha, thanks very much for that. So, quieter in terms of commodities over as compared to the last 1 week or so. Manisha, we'll come back with more. We'll take a break here. Amnish Agarwal of Prabhudas Lilladher will join in for some specific stock talk when we return. Stay with us.